this business, and what a ride it's been. Welcome to TradingAnalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks, so it's been my mission to run an above-board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life seven-figure portfolio with our members who prefer the longer-term investment time frames with some medium-term trading and option strategies mixed in as well. So head on over to TradingAnalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show. Good morning, traders. Todd here. Welcome to the Wednesday live stream with the Trading Analysis team. I am Todd, founder of TA and Inside Edge Capital, and hope you guys are doing well. Thanks for joining us. Typical a little bit more than 5 minutes late. We'll get it. So hope you guys are well. We're bringing the TA team. Just some opening comments here. We have futures. Well, you know, a little higher here. Heading into big data tomorrow. CPI Thursday. This is going to be. I feel like every CPI report they say this is the report of the year. But everything I'm seeing, there's a lot of indications that inflation is on a month-over-month basis is dropping, is closer to the Fed's 2%, and it has everything to do with where that short-term, that terminal Fed funds rate is going to go. Is it going to get a 5 handle? Is it going to stay below? How long is it going to stay there? And I feel that's driving so much of the market here. So we have indexes in a pretty tight consolidation here heading into tomorrow's report. We have pockets of strength in the semis. We've got pockets of weakness in some of the industries within consumer discretionary. We have a continued value trade that's outperforming growth. Is that with us for a sustained period of time? It's a big time trading market here. It's no longer by the fangs and hope for the best. You need to be a trader, right, boys?
That's right. How y'all doing today?
Hey guys.
We're good. And poor Terry, he's got video and he's got psychedelic things streaming through his shirt. I'm gonna get your chroma key set, Terry. I apologize.
I think we figured that there's a missing background or something there. I'm transparent, so
I'll get it.
Out of phase. If you guys ever watch Star Trek, you know I'm phasing in between alternate realities or alternate universes. So
it feels like every week of our trading lives in and out of alternate reality. Yeah, so just bear with Terry. I'll get the chroma key set, but Terry, it's not how much you look; it's what you say and how you and how we help our customers, clients, and viewers stay on the right track in this market. Alex, what's up with you, man?
Hey guys, all good. Just looking what's going on this morning on a different assets classes. So cryptos, watching a bit commodities, and has prepared a little bit overlook on the tomorrow's CPI. So all good.
Yep, all good. Just a couple updates. Very, very cool. Alex is going to be bringing you kind of a new little segment here on the live stream. Top 5 stock charts he's looking at. He's been doing a lot of good work on the LIQUIDITY setups of stocks that we're looking to either trade on the short-term options market or add to our portfolios that we're running. Trading analysis that I also run on the wealth management side. And, of course, Terry will be hitting sector spin, showing us what's going on the rotation. I'll start up top on the indexes here and kind of jump in, show you where we're at longer term. Before we do, don't be afraid to hit that thumbs up button on YouTube if you don't mind. You're either watching on one of two YouTube channels. I can't chroma key Terry properly, but I can stream to two YouTube channels at once, so that's fun. Either on info at Trade Analysis or my old Todd at Trade Analysis, and we'll figure out where our home's going to be. All right, so you guys are all live. This is sort of a new format. There's no sense, I don't know. If anybody wants to jump in, this is a collaborative discussion. So we're going to be screen sharing with all three of us in here. So jump in, interrupt. It's collaborative. It's a team effort here. So, longer term here, S&P, we're breaking it up into two counts, red and blue. Doesn't matter what they're named. It's arbitrary. It could be peanut butter and jelly. But this is the S&P red, and let me hide some of the detail here. And, I think for now, our base case is that 2022 is an ABC. We have 5 off the lows. I know I'm taking, it's not the most obvious 5, and this is really where the work jumping inside below the index level down into sectors and industries and individual stocks really matters here. So, we can look at a couple different markets to suggest this is a cleaner 5 off the low. And then the question is, after this failed attempt at the 200-day, you can bring this trend line down from 2022. What was this correction lower? And last time we met here on the free live stream, we had it as ABC. Support was expected to move higher, but it was higher from a completed wave 2. I think for now, we are going to let this guy become complex and require another ABC move down. And I'll show you why, and it points to the NASDAQ. So off of the daily, let's get down into something sub-daily. This is the 60-minute. So here is that first December high, 3 down to December 6th, double test December 13th for B, and then we had 5 waves down. And this is what's very... this was like a breath of fresh air, because ever since the October low, Alex and Terry, between December 13th and December 22nd, we finally knew, oh, we see what that is. That's a 5. There was no ifs, ands, or buts about it, right? So after every 5-wave move, you need at least a 3-wave correction, and that's what we got. Problem is, the move from December 22nd, post 5-wave move, that's not a 5. It really looks like some kind of a slop and chop into the end of the year, into the new year. Then we moved up. We identified the zone of resistance clearly, and it doesn't really, bless you, it doesn't really look like it's 5 ways below. Bless you. So, that's the thing. Is it 3 up for X? We need one more push down, and if it's a bad CPI with a 6.5, 6 handle, 6.5, 7 handle, I don't see why we're not going to get this. But the importance of having a bigger vision or understanding of what's happened before that is at the heart of this pattern. It's 5 up, complex 3 down, into should hold, must hold. S&P needs to stay above 3613 to keep this alive. Now, here's what's changed and what we're doing with our members since we were together last week. The NASDAQ, I've abandoned the red, immediately bullish NASDAQ count. The NASDAQ and the growth trade continues to be weaker than the S&P and value trade. There is not a lot of evidence, and if you remember last week, and you can go back and watch the video, we had 5 off the lows, down into support here. The NASDAQ jumped down all the way to the 786 retracement. And that, for us, is sort of the retracement of last resort. And if you, on a wave 2, if you don't hold 786, then you're likely going to new lows. So if you think about what I just said, the lack of a 5-wave move off the lows in the S&P that looks like A, triangle B, C for the X, doesn't look like it's going to be able to just rally straight up. we have to make room for new lows in the NASDAQ because of the fact that we touched the 786 of the October to December low. So we can't say, this is wave one, here's A of two, B of two, C of two, because you're not going to have any room to break new lows. And that's going to be invalidation to say that's a new uptrend, 3 waves down. So we have to embrace NASDAQ and growth trades continued weakness relative to value, allow for a new move down into typical support. And the question on the table is, can the NASDAQ get down into these deeper support levels, which are labeled clearly right here, while the S&P stays above its wave count and validation, which is going to be a new low right here at 3,500, but ideally above 3613. So can the NASDAQ jump down into that 10K, 9K level, fulfill that weaker wave count while the S&P keeps this count, which allows for one more move down? I know this is the sick and twisted life we live, but unfortunately I don't have a crystal ball to tell you, this is the indicator that tells you to buy or sell, and here's exactly what's going to happen in 1 to 2 weeks from now. But this is the game plan that we're operating on going forward. Now, if the S&P, if we come out with a 5 handle on CPI, can the S&P go 4,100 bid? Probably. And then at that point, then what we're going to have to do is go back to the last interpretation we had last week, which is 5 up, 3 down. And I know what Terry's going to say. Markets don't wave a green flag at the bottom with a nice clean little 5-wave move up and say, hey guys, come. Oops, 3, 4, 5. They don't. It doesn't wave a nice little clean 5-wave move right off the lows and say, yep, that's it. Come by me. It's going to protect its hand. And if by chance our primary interpretation is wrong, and we come in ripping after tomorrow morning, then we're going to have to force a little 5-wave move off the lows. So it's going to have to be like leading diagonal 1, ABC down in 2, and then we're starting higher in wave 3. I'm hedging my bets, but I think that's being a responsible, prudent trader and saying I'm still leaning on the downside for slightly lower levels. But if we get caught off guard, we're just going to have to go back to the original red count we're working. Guys, what do you think?
Yeah, absolutely. I mean, due to that nature of that, and I'm sure I'm not the one that came up with it. I think I heard that and learned that from my old mentor, Todd Gordon, years ago. Yeah, it sank in. Without the true conviction, you can't just jump in with both feet in either direction. So, remaining hedged at this point, and until we get a clear directional trade, there's no sense in burning yourself arbitrarily. So, I do want to point out on that chart that we're still holding above the November lows in the NDX.
Yeah. Oh, let me go back to NDX.
In the NDX and the October lows.
Yeah. Yeah, for sure.
Regardless of the Elliott wave count, we are still holding up. And then the other thing, price action this week in the NDX. Index is up 1.5% versus the S&P 0.62. So while we haven't seen that outperformance over the last several weeks or months in the NDX to the SPX, these last few days are showing some major turnaround. It's almost a 3-to-1 ratio up, in terms of percentage gains. And the XLK, being up 2% already. XLY is up 2.67. I'm killing all my talking points I'm going to have here in a minute anyway.
That's all right. No, baby. Listen,
there's a move happening, right?
So NDX is 4.76% off of the lows. And you're saying SPX is only what? Where's my ruler? Okay. I mean, it's 4.1. So, but NDX.
Is that from the same date?
Oh, no, I probably cheated. Probably from January 6th.
Yeah, measure it from there.
Yep, I got you. Yep.
That's what
3%.
I'm looking at. It's that
Yeah.
near term, just in the last few days, that we're seeing. There's and of course that we all know that commonly as beta, right? So I don't know. I don't keep memory of what the beta ratio of the NDX to the
Yep.
SPX is, but it
Yep.
certainly has been going down quite a bit.
Yeah. Realized range. Yeah. The beta, the realized range of the NASDAQ, you can measure that by ATR. APTR is going to be consistently higher than that. But, and Terry, I mean, am I gonna blow you up if I just go to semis
No,
quick?
no, go
Okay.
ahead.
Okay. If you look at SMH, I mean, Terry on the rotation has been pounding the table, watching for relative outperformance in semis to the Nasdaq. This is something that's like, okay, that's 5 off the lows. As weak as the Nasdaq is, and us abandoning the red bullish count that was this. I mean, this is not bearish in the semis.
It's
And
so hard to beat the drum to say go buy tech when all you see and hear is tech is dead and tech is underperforming. But at some point that will start to transition, and at some point some of the tech stocks have to be the first ones out of the gate.
yeah,
Right.
yeah,
And so that's been the uphill struggle is gaining your conviction to want to jump in and buy semis when all you hear is that tech is not where it's at. So it's you're fighting an uphill battle there. I think that's what I've been doing.
yeah. No, I'm 100% with you. So you have SMH. You got 5 off the lows, and then if you just look at, here's our bearish interpretation. If semis are going to fail tomorrow, it's got to happen below 235. And if that's the case, boom, we are looking to set up, and I think I'm going to do it. I'm going to do a little call structure here, light. In the case of a pretty significant move up, I continue to be hedged on our long positions via Q put spreads. I'm taking some heat on those now, but they're designed to be hedges. And if I was reading Tom Lee this morning, and he's looking at year-over-year inflation heading back down into the 2s on this report. Like, this could be a 4 handle on year-over-year headline. He's saying, if you look at month over month, we're flat, maybe even declining. And if you come in with a 4 handle on headline year-over-year for December, I mean, this market could rip on the upside. And I'd like to do a little call structure here above in semis, and there's some names we're holding. So.
Yeah, can you zoom out on that just a little bit and show that whole A wave? That whole. So in our triangle structure, I mean, declaring the October 13th lows as the bottom here, there's 7 waves, right? That's the issue. So we had to count 5 down in A, and then that puts us in an ABC. And the way Todd and I were looking at this, we said, that doesn't look like necessarily. I mean, it could be a flat, but the issue is with an extended B above the A to the downside there, you would expect the C wave much higher. So it doesn't really work out as an ABC. So that's why we're leaning more towards a potential triangle play there.
Yeah.
And then with that triangle, then we'd be looking at a 618 retracement of C versus A to the downside. If that plays out.
Yeah, I'm with you. Let's keep moving. I want to keep it on time here after being late. Good call there. And then the big key is going to be rates. In terms of the 10-year yield, is that 5 down on the 10-year from 4.3 down to 3.37, 3 up? So is that 5 to a 3, and that would mean we would require another 5-wave move down. And the big question that we're looking at with our subscribers and clients is the last anticipated 5-wave move down into the 3.1, 3.2. That's certainly going to invert the yield curve a lot more. I think we have probably 80 on the 2s, 10s, 2s, probably 80-ish points of inversion. If we drop another 50 basis points, that's going to further invert that yield curve. And what's the stock market going to do if this interpretation plays out? Does the stock market view it positively? And you could just simply do a crude overlay here with S&P, and you can see there continues to be, what's a pretty color here that'll stick out? Red, I guess. There continues to be a pretty good inverse relationship of yields in S&P. It's not always the case. So that means stocks and bonds are trading together right now. As the B-wave rally happened in the 10-year, S&P futures backed off, and as we backed off, 10-year dropped from whatever 3.9 to 3.5, you saw a little relief rally in the S&P. If we continue to drop, does that S&P continue to go up and attack higher prices? Or does that lower yield signify risk aversion? So we have to watch that reaction. I think it's going to be the former. Go ahead.
So we know the Fed's interest rates not going to change interest rates this month. The next meeting for that is February, right? So there's no expected rate change. So I could see the 10-year continue to drift lower between now and February Fed meeting, right? I mean, because that's the impetus that makes the bounce and shifts everything. So if there's no net change, there could just continue to be consolidation,
right,
in that yield.
Yeah. All right. Let's, Alex, you're quiet. What's going on, man? You're out too late last
nothing,
night?
Just working something. Some members ask for a couple of crypto updates, so just working on the charts for them. I'm listening all the time. So as I'm going to show you, CPI, I think it's going to go down. So I have a cute overlook of all of the things there.
All right.
So maybe I'm going to look for a lower reading. So it's a tricky when you have this kind of a large increments of forecasts. So from 7.1 forecast we go to 6.5. Yeah. So
all right. Do you want to? So why don't you want to flip up and you want to roll into CPI because we were just talking about that. I know you're watching some cool stuff.
Sure.
You ready?
Sure.
Okay. Go ahead and share your screen there.
Okay.
There we go. Okay. Yep. You're live.
So do you see my CPI chart or just figure this out?
We see Broadcom.
Oh, okay. Sorry. Let me just find. So now you should see the CPI.
Yes.
Yeah. So this is the 20 years of different components of the CPI. So as you can see, in most of these 20 years, there was three components moving in a pretty volatile fashion. That was, of course, gasoline, energy, and it was also natural gas. So this is the only three components, and the rest of the fluctuations between the others was pretty flat, as you can see here, until we come to the 2021, where we have this gasoline, energy, natural gas move on the upside, and then you have commodities, food, and also services going up. So now they're all start to trend lower. So we are seeing a huge drop, as you can see, in gasoline. We are seeing the huge drop in energy, and we are seeing the huge drop in natural gas. So basically, all three volatile components that was affecting with such a huge supply shock rise are trending lower for the last couple of months. And now we are seeing that actually transpiring into the lower sectors in the industries that are actually showing the measure of these larger components. Okay, so they're all trending now, and actually, as we said on RRG, they have now like kind of a small hooks on the downside, so they are dropping.
Yeah.
So this CPI should go lower again. Just the question how the market will react if we get to, let's say, 6.8. I think these forecast increments are relatively large. So that is my only debate. But according to this, what we see here, I think we're gonna get the lower reading.
Got it. Got it. Okay. Keep going. And
okay. So
yeah.
on the other hand, we are seeing the dollar index chart. So this is the end cycle of this first 5-wave move lower. So we should see dollar starts to correct higher. So first 5 waves from the top of 114.89, and we see that in euro dollar, pound dollar, Aussie dollar. So on the FX markets, we do see all of these risk-on currencies actually posted and carve up a 5 waves up, which means that the longer dollar uptrend is actually completed here, and we're going to have a midterm pullback at least. But I think that the first sequence lower, it's going to come to an end very soon, and we're going to have a pullback.
That's going to be dollar higher. I mean, that's going to push us down into that 10,9,500 level in the NDX.
Yeah,
yeah,
exactly.
Yep.
So this also kind of agrees that this CPI might be a little bit afterwards dollar bullish, and also we have this correspondence in the stock charts and in the Bitcoin chart, which shows one more move to the downside, which kind of corroborates with the stocks potentially going a bit lower. So if I'm going to show you a Bitcoin chart, we are looking for the last sequence before we start to move on the upside, which will be actually this ending diagonal wave count, where we expect a little bit another push to the downside to complete actually this very big bear cycle which we have from October, November 2021. So 5-way move down, it's going to complete soon, and we're going to have either a new uptrend or a larger pullback, which actually agrees that in the next 15, 20 days, or even around a month, we're going to have risk on assets going higher again.
Got it.
So also, as you can see, this pullback in dollar should corroborate with all of these pullbacks and completion of these sequences, and then a sharp reversal and a pretty steady 1-year uptrend in the different assets classes. That's how I see it for now.
Yeah, that's good. That's good. We're going to do Alex's 5 focus stocks right after. I'm going to bring Terry in here next, and I just want to talk about, just echoing what Alex is saying. If you just look at expected inflation, if you look at the 2-year expected inflation here, this is from Fred database. We got up as high as 2 years out, 3.17. We're down about 2.53 on 2-year expected inflation, right? So, if you look at long-term inflation break-evens, 5 years out, we're at 2.2. You can go all sorts of different studies to show that inflation expectations are coming in. If you look at this one right here, I posted this for members. A lot of discussion has been had about reporting of nominal rates and nominal figures, which don't bring inflation into it. You have to look at real rates. And what's going on here is I did my best to construct a real yield curve. They don't give data, I don't know, I have to change the position of this. They don't give data in terms of real yields at the 2-year level. The smallest I could find is a 5-year. So I'm looking at a 20-year minus 5-year real yield curve, right? So that's what really matters in here. And you can see that we have been making higher lows on the real yield curve. And as we bring the S&P down in blue, you can see that there is going to be some correlation in there. It's not perfect, but it's in there. The S&P is now making higher lows. The real 25-year yield curve, okay, is making higher lows. If we can somehow get back to positive bond yields, taking into account inflation, that is going to, I think, give more clarity to the stock market, and that's kind of underlying what Alex is saying, and that's going to give us more clarity as to where we are in the wave count. So leave it there. Terry, you ready? You want to take us into your world? Terry? Oops. Terry? This is Alex's screen. It looks like we lost Terry.
No, I'm here. I'll take it for a few minutes.
Okay. Go ahead. Jump in.
All right, gotta get your stuff off the screen.
No, you share on Zoom.
Oh, I'm not sharing. Sorry.
You should be able to share.
Share. There we go. All right. Okay, guys, let's take just a quick look at what's happening. This is, just continuing that conversation from earlier. We've got consumer discretionary sector, technology, materials, communication sectors, real estate. Look at these moves here. Real estate up 1.5%, but consumer discretionary and tech up over 2%, and that's just in 2 days of trading, right? I mean, we haven't even market is about to open here in a few minutes. I guess there's some pre-market action in there, right? So you're getting a pretty good little kick here. Even last week, we had a 1.5% rally in the S&P and about a 0.9 in the NDX, and you're tacking on more this week. So, but truth be said, look at this red line here. This red line is a 200-day moving average. The blue is the 50-day moving average, and the little green is the 20. The S&P is sitting right here at a confluence of the 50 and the 20, still below the 200. The NDX is much deeper below that, and that goes in hand with the fact that we've been saying the NDX has been underperforming the S&P quite dramatically. Excuse me, frog in my throat this morning. But we are seeing this little push. So really, I'm still looking at this 4,000 level, and that's where that 200-day moving average is sitting at 39.89, so about 3,900. And again, just reiterating what Todd said, we're going to push higher from there, or we're going to break down and see some more lows. But I'm just cautiously optimistic, holding these bottoms here from the November lows, and still being above the October lows, that we might have something going on in growth stocks. All right, let's look over here at the sector leader scoreboard, and in the weekly rotations, we still have energy as the top performer with 107.8% relative strength ratio. But we have been noticing over the past several weeks now that we've been seeing a momentum drawdown, right? So we'll take you back to about 8 bars, so about 2 months ago, back in November. That's when we started to see energy still pushing to the right, gaining relative strength. But then, here right in December, we started to seeing this push, and this push back to the southwest. So relative performance to the S&P, this sector is giving back some, while we've been seeing materials and industrials and others. And I'm gonna take you back 1 week there. Let's just go to the end of Friday. This is as of Friday's moves. We were still seeing materials, industrials, and all of these leading. We noted the hook that formed here in utilities. We noted the hook in XLK that was still to the southwest. Now look what's happened. If we tack on Monday and Tuesday's price action here, note that we're seeing decay. We're starting to see some decaying momentum come back out of these value plays, right? There's financials, there's healthcare, there's industrials. You're starting to see the southwesterly hooks there. At the same time we're seeing over here
that tech move is most interesting
in the XLK. Sorry?
That's so interesting right there. That's a sharp move back into the improving.
Yeah, that one right there, and that's kind of what I was saying. We're up 2% in the XLK this week. There's a big reversal happening right there. If that can continue, then maybe we're going to start to see some more strengthening in growth and technology. I have that over here. Let's see if I can switch over to it. So just take a look here. This is on the weekly charts. Here's the IVW, which represents growth, and here's the IVE. So it's essentially just collecting those same sectors that I just showed you, the ones that we know are pretty much value. They're starting to see a momentum shift, right, down. And the ones that we say are growth, they're starting to see that momentum shift. Detecting this early on, because of the nature of the orbitals that these things do, right? If we detect this swing point early, we can get in early enough to ride the move to the right. Because what it is, guys, is as we are continuing to gain relative strength against the S&P, that's where outperformance exists. So that's our opportunity that we're going to be focusing on as we're moving through things here. Just on another pointed topic, I wanted to bring up a scan of new 52-week highs. Who would believe that we're sitting here with stocks making new 52-week highs, right? I got 10 of them here for you. If you want to individually take a look at some of these. Anything on here interest your?
Well, I mean, you got to love Caterpillar. We're holding dear. You got to love heavy industrials, and then I think that Las Vegas Sands is incredibly interesting, as well as Wynn.
Las Vegas is.
Yep.
And those are in the consumer discretionary sector, and they're not Tesla and they're not Amazon.
Yeah.
Right. So we've been beating that bush that you've been missing out in discretionary if you've only been focused on the cap-weighted sector itself and seeing it penetrate to the southwest. But yeah, here's Caterpillar pushing to new 52-week highs. I don't know if that's an all-time high, but certainly as I zoom out here in my feeble attempt to show a wave count, if that's a 3 and there's a 4 down here, not here.
Nah, let's move on. But yeah, no, but Wynn is a big one. Las Vegas Sands, just talking about the outperformance in Chinese stocks, sectors breaking down within consumer discretionary, getting away from the mega cap consumer discretionary. There's been pockets of strength. And that's what we've been focusing on this week, is finding opportunities sub mega and large cap, because you look at equal weight consumer discretionary, ton of strength. Relative to even the S&P, not cap-weighted consumer discretionary. There's a lot behind the scenes right now, which is going on. So, go ahead.
One last thing, since we talked about semis a little bit, and like I said, just looking at the relative rotation of the semiconductor group, you can see how far advanced many of these are. And Alex is, I think, going to share some wave counts in a couple of those. But we saw this outperformance starting. Back here, right? So it was late in November that semi started to jump out, and tech's still going down at the time that we're seeing these semis push higher. And now we've got out of this top 30 semiconductor stocks, probably more than half of them now are pushed over into the almost 2/3, right?
Yeah,
almost 2/3 of them are riding now with relative strength ratio greater than the S&P. So they've been as they've been moving, they've been the ones that have been outperforming. So, all right, I'm going to leave it there for Alex and let
good work.
You can pass it back over to him, and we'll see what he's got to say.
Sounds good, Alex. Yeah, go ahead and bring your screen up here. That's what we're talking about. Is I think that's couple core themes, takeaways. Is growth is threatening to rotate back in. Tech NASDAQ count is a little vulnerable, at this point, but semi-strength starting to move in. We have anchored inflation expectations even at the 2-year mark. We have, I think some visibility as to where the Fed's going. Alex is somewhat bullish on the dollar, which I hope you're wrong, Alex. I love you, man, and you're more often right than wrong. So we'll see how that goes. But there's consumer discretionary, which has been a major outperformer, being driven lower by Tesla and Amazon on the market cap. Those two are actually starting to find technical support, but there exists pretty good relative outperformance in mid cap consumer discretionary and Chinese stocks. China internet is ripping back, and that's correlated also to U.S. semiconductors. So there's a lot going on right now. All right, Alex, what do you got, man? Oh, sorry, hold on, I gotta unmute you. And yep, you're good.
Yeah, so on most of the sectors that we do for our members, I'm pretty bullish, as you are saying. So I selected a couple of stocks which are in a position of a relatively potential small pullback before they rip higher. So what you see here, it's XLE, a defense sector. It's Raytheon, which I think has a pretty nice, decent move on the upside left. And technically, it's a relatively a very clean wave count with defined areas where we want to be involved.
That's nice.
I'm going to show you also a couple of others. Communication sector was pretty beat up. And there is a few stocks technically which I see. This is the Omnicorn, and this is really a wave count I like. So this potentially says that this one has, after a small pullback, a huge upside left. And I'm going to be focusing on a couple of stocks from the Google is also there. We are seeing a potential technical support very soon in Google as well. But this one, I really, really like the development.
Look at that,
so
quadruple tops, almost never hold.
That's never holding.
Alex and I were Alex and I were debating this one because that's an all-time high.
Yeah,
that overhead resistance has never been met.
Yeah,
and this stock's been mostly sideways for the last 5 or 6 years, right? I mean, all that down and then back up, and so. Testing, if it breaks above that overhead resistance, I mean, the only thing you got above that's fib resistance because there's no hard background, and if it gets a release, this one has been one of the first communications that returned back to the leading quadrant while the rest of the sector was underperforming. So if the whole sector returns back, you might get this one might be the one that pushes higher.
I love it. I mean, this goes right to the point that we were making. I'm just, this is a $17.5 billion market cap company. It's a mid cap. It's actually considered a value, which I find interesting. I guess with those revenue growths, that would make sense. But $17.5 billion market cap, 3.25 yield, and it's trading 13 times forward earnings. That's one that I'm going to consider for my dividend portfolio. That's a good one. I like that. Go ahead, Alex.
Yeah, and technically, as you know, it's amazing because, as you said, I don't think this when we tried this to actually go even 1, 2, 3, 4, 5 times. I mean, this it's going to be a charm when this break up on the upside. So I like it very much. Yeah. So from the perspective of the XLK, I like Lam Research. I think that the technical setup is pretty nice for the continuation of the uptrend. So really clean wave count, 5 waves down in A, up in B, down in C, equality between the A and C, which we usually look. We went above this upper trend line in a wave 2, so potentially we are already starting a wave 3 on the upside, and our potential orders might be very soon after this smaller wave 1 is complete, and then a smaller pullback might announce a bigger move on the upside on the Lam Research. I also love a setup on Broadcom. So this one also looks pretty bullish to me. So on the uptrend, this is really something which might have a very small pullback before we continue. So also very simple setup. So we have a ABC pullback, which is completed, 5 waves up, a kind of a small consolidation I do expect. But
break that apart. Give me more detail inside of that weekly.
Yeah.
Okay. So it's almost like this is A, and then if we're doing B wave up, we do
Yeah.
one more little push down. Yeah.
Yeah,
That's going to be at odds
exactly.
with Lamb. I see what you're saying.
Yeah.
But
Yeah.
I mean, look at that intersection of the 50 and 200 day as your, as, you know. Wow.
Very good one. Yeah.
Wow.
Yeah. Yeah. Very good one. And also from the XLV or a health, XLV, I have a ResMed. Terry and I located that on the RRG yesterday. So this is a pretty nice pullback we expect. So it's for a short swing trade portfolio that we have for our members. So also a simple 5-way move. So this is something on a shorter term basis. Look, this correction, it's a beautiful WXY reaching equality here, 786, and we are starting to move on the upside. So we have a 210 to 260 space on the upside. So it's a relatively nice one for the shorter term trade on our swing portfolio. So
nice.
I like this setup for a pullback also very much.
Good work, man.
I think beauty's in the eye of the beholder there. You know, a beautiful WXY, those things are ugly to me.
Yeah, but we're so used to looking at them. Come on, you know. I think this market, you see more, I think it's more common to see complex corrections than it is common simple corrections.
Yeah.
So, all right, good work. Well, NASDAQ's open, up a half. S&P's up the same. Crude's getting a little bit of a bid, 1.5%. And let's see, dollars down a touch. Rates are on the move again, down to 3.6. Interesting. Okay. Good little open, being led by real estate, discretion, and materials here. Lagging today is health, comms, and tech. So it's a little bit of a, we got to look inside of that XLY. Here, let me see if I can share this quick and just give you an opening read here. This is sort of an interesting leaderboard to start the day. See if I can pack that in, and then we'll send you on your way. Yeah, so real estate is leading today and then consumer discretionary, materials, energy. Industries are hotels, REITs, broadline retailers, recreational products, REITs, hotels. So it's it's consumer discretionary, travel, as well as some real estate on the upside as interest rates are dropping here pretty good ahead of CPI. We put a video up, another stock that's on the lookout. I did CNBC last week talking about Crocs, why it's better than Nike from a function, fashion, and fundamental point of view. Crocs. You might not agree with me, but check out YouTube for that. Guys, hope you enjoyed it. Hit the like button. Check us out at Trading Analysis. We're heading into the members webinar in 15 minutes. Big CPI report. Thanks for hanging with us. And see you next time, guys.